When the greatest investor of all time is this cautious, markets should pay attention. Over the last 3 years, Warren Buffett and Berkshire Hathaway have sold over $184 billion worth of stocks. This comes at a time when stock market valuations are even richer than they were at the dot-com bubble. And if you needed more signal, well, on Friday, you weren't paying attention to the meltdown that was happening in the banking system, probably because you were too busy getting your Halloween costume ready. The Fed had to inject $50 billion into the system in a single day, the highest since March of 2020. Bitcoiners were probably still mourning the fact that they had a red October for the first time since 2018, but completely ignoring the fact that the system is screaming that it needs to be saved. Consumer spending tanking, bank reserves dropping off a cliff, and banks sitting on more unrealized losses and L's than the Pelicans without a first-round draft pick next year. This isn't time to panic. This is the time that Bitcoiners told you was going to come. Banks will collapse, and when they do, the Fed will have no choice but to inject liquidity into the system. This is the end game, and this is Dante Cook with Bitcoin Simply. Let's break it down.
RIA is dipping in for the first time.
Yeah, well, the biggest conversation gets back to what you alluded to at the start, which is trying to understand the risk and return drivers of this. Because when you look at it fundamentally as a global, scarce, emerging monetary instrument that looks a lot like digital gold to many people, and that is detached from the risk factors that affect any one country or their economy, monetary, political, fiscal situation, etc. That looks like a diversifier and a hedge on a fundamental level. But then you see this noise in terms of short-term trading episodes where people talk about risk on. That's a bit of a dubious concept to begin with.
The reason why $11 trillion BlackRock is calling Bitcoin a diversifier and a hedge is because they understand what's going on behind the scenes. The current system is collapsing right in front of our eyes. Banks woke up on Friday morning like Kevin Hart.
Help me! Help me!
At 8:30 in the morning, the Fed jumped in to inject $20 billion of liquidity to banks that were screaming for help. And in case that wasn't enough, they needed another $38 billion injection by 1:30 that same day. What happened to cost such a major investment from the Fed? Well, it's the private credit market and the banks that have been screaming for the last several weeks that there has been trouble in the system. Well, we're starting to understand and see exactly what's going on. The bank's liquidity is drying up. We haven't seen this much liquidity flow into the system since September of 2019, when the system was completely dry and there was complete stagnancy in markets all across the globe. Banks have been sitting on unrealized losses for years, holding long duration treasury bills that are now coming to roost. And banks have this crisis on their hands, and so does the Fed, which is why Jerome Powell says that they need to start to begin to grow their balance sheet. He says at a certain point,
freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point.
I'm such a kid. When he said shrinkage, I did laugh. I'm going to be real. But back to the point. That certain point is now. Like Count Dracula sucking blood out of somebody's neck. The regional banks have been sucking liquidity out of the bank repo system as bank reserves are now lower than $3 billion. Meaning the only way to sustain the system is injection. The US banking system is sort of like a junkie that can only survive if it gets another hit of liquidity. You know what I'm saying? And the only thing holding up this entire market right now is this AI bubble investment thesis. The consumer markets actually look pretty rough. One great indicator that you can always look at on your own if you want to do your research is the freight markets. Because when the freights ain't shipping, we ain't buying. Freights tend to move when we're buying groceries, when we're buying consumer goods, and when we're buying product. Well, when the demand for drivers go down and the volume of freight goes down, that means less people are buying. Pretty simple. Back to the AI thing. This is honestly the biggest red herring that leads me to believe that this thing is going to pop. And when they do, they are going to have to inject liquidity into the system because there is no entire market overall. It's just the stock market. There's not Main Street and Wall Street. Main Street is struggling. There's only Wall Street. And this clip right here tells me exactly why I believe this AI hype bubble will burst, just like the dot-com bubble in 2000.
How can the company with $13 billion in revenues make $1.4 trillion of spend commitments? And you've heard the criticism, Sam.
We're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer. I just, enough. Like, people are, I think there's a lot of people who would love to buy OpenAI shares. I don't think you would
including myself. Including myself.
People who talk with a lot of like breathless concern about our compute stuff or whatever that would be thrilled to buy shares. So I think we could sell, your shares or anybody else's to some of the people who are making the most noise on Twitter, whatever, about this very quickly. We do plan for revenue to grow steeply. Revenue is growing steeply. We are taking a forward bet that it's going to continue to grow, and that not only will ChatGPT keep growing, but we will be able to become one of the important AI clouds, that our consumer device business will be a significant and important thing, that AI that can automate science will create huge value. So, there are not many times that I want to be a public company, but one of the rare times it's appealing is when those people are writing these ridiculous OpenAI is about to go out of business and, whatever. I would love to tell them they could just short the stock, and I would love to see them get burned on that. But
whenever you see somebody get this defensive and this aggressive, when just ask a simple question, how are you going to sustain $1.4 trillion in investments when you only have $13 billion in revenue right now? Let me translate. It's a Ponzi scheme where we need the media hype cycles to continue to push out press releases of how much investment and forward investments we're getting to sustain the revenues that we have and the costs and expenses that we have that are rising faster than the revenues. This is a Ponzi scheme happening in plain sight, and we've seen this before. And when the AI bubble pops, the Fed won't have any choice but to step in and prop up markets. And Warren Buffett knows this correction is coming. We told you at the beginning of the episode, they've been selling for 3 straight years, $184 billion worth of stocks. They actually have $382 billion worth of cash, enough to buy 477 of 500 S&P 500 companies in cash. And when that happens, people are going to panic, and they're going to think the system is stopped or the system is broken. Well, the normal financial system will stop and the banking system will be shut down, sort of like what Scott Bessent said that won't happen to Bitcoin. It's the only system that isn't going to be shut down, unlike what he calls the Democrats shooting a little shot right there. And this system shutdown, this calamity going on in the U.S. financial banking system is exactly what Uncle Ray Ray is saying is the leading cause as to why central bankers and countries are buying gold.
It's likely that those deficits will then produce lots of bond sales, which will compound it. When you get into the point in the cycle where debt is needed to pay debt.
Okay, pause. I think he meant point, but let's continue.
And compounds, it becomes a problem. It becomes a problem also for the central banks, because the central banks, by the way, this is not just an American problem, this is a world problem. The central banks themselves own the debt. And so, and they lose money on the debt. And so when they're losing money on the debt, and they have asset liability problems, then they also not only have to monetize essentially the government's debt, but they also have to monetize theirs. And those are the characteristics that produce a deterioration in the monetary order. And that's why what you're seeing. You're seeing a dynamic of why countries, for example, are letting their reserves or their assets in bonds and so on go down, and they're acquiring and have been acquiring gold, for example.
The major winner of the 21st century won't be gold. Gold cannot be moved and translated at the speed of light as a digital asset like Bitcoin. We're moving to a stable coin, fully digitally backed system that needs a hard asset, and that asset will be Bitcoin. It's no wonder that Treasury Secretary Scott Bessent is talking about Bitcoin in tweets. But before we go any further, let's go to our sponsors. Ledn has been the leader in Bitcoin-backed loans since 2018. They know what the supreme digital asset in the world is, and that's Bitcoin. Like a house, you don't want to sell the house or sell off a corner of your house to get liquidity from it. You take out a home equity line of credit. Well, people do the same thing with Bitcoin. They don't sell their Bitcoin, they unlock liquidity in their Bitcoin without selling it. So if you want a $3,000 loan, well, you post $6,000 in Bitcoin collateral. There's no credit checks, and loans start at just 12.4%. Fiat gets in your account in less than 6 hours. And if you go to the link, learn.ledn.ao/simply, well, you get 0.25% off of your first first loan. It takes just 2 minutes, and it is the best product in the world out there if you're looking to unlock liquidity in your Bitcoin. Get started today. And the Bitcoin Way are the leaders in helping people to understand how to protect their sovereign investment into Bitcoin the right way, how to become a sovereign individual. Learn how to do this privately, securely, safely, and confidently so that you won't need to be worried when the next crisis comes. Your Bitcoin will be safe in your possession, and you'll know exactly what to do with it and how to use it if the time comes. Schedule a free 30-minute consultation with their team at thebitcoinway.com/simplybitcoin. Bitcoin has been chopping sideways, and it's because there's been a lot of liquidity slushing around in the system, but that liquidity actually hasn't been flowing into Bitcoin as much as people think. Some analysts like Willy Woo, which I always reserve my, questions for, say that he doesn't see liquidity flowing into Bitcoin, and that's why the system has been a bit choppy. But he also says this is exactly the time when we see the blow off top, or when Bitcoin rises from 2,000 to 20,000 in a blink of an eye. Listen to what he has to say right here.
I just do really dumb shit, which is measure the flow of capital coming in. I don't look at why. I don't speculate why. I can, but I'd probably be wrong. It's not coming in at the same rate. So it tells me that we're in this phase where liquidity is starting to reduce relative to the growth of the price. And that divergence is growing bigger and bigger. And at a certain point, the clock stops ticking, unless there's a massive injection of liquidity some point, right?
In the broader economy.
No, in the Bitcoin network, right?
Okay.
But I've never seen that. We measure it, it peaks and then it starts tailing. You might get a little bit of this choppiness, and those choppiness adds to another bullish run, but the clock's ticking. And so, yeah, we're late phase in the bull market.
I was just about to ask, we'll finish this topic. You'll definitely say this is late stage of the bull market in the final. It's the final leg of the bull market.
Yeah, and that's when things get interesting.
But to be clear, that final leg
could be huge.
Could be 3 to 9 months.
It could be 3 to 9 months. Yeah, I think that's a good sort of window. And also, if you look at some of the past cycles when the liquidity started sort of dropping away, that's when the fireworks happened. That's when Bitcoin ran up from, say, 2.5 to 5,000 to $20,000, right? That's a blow off top.
Are you ready for what happens when the Fed has to step in and print? The banks will collapse. They're sitting on long duration bonds. They've tapped out all of the liquidity that the Fed has in repo reserves and otherwise. And now they're sitting on a book of bad loans that are coming due to roost. This is the ultimate opportunity for people to think longer term about what's going to happen next. Not just first order effects, but second order effects. And I think Bitcoin being a diversifier and a hedge, just like BlackRock said, is going to be the winner moving forward. What do you think? If you don't understand what's going on, then you need to get some alpha by subscribing to channels like these, where we drop alpha like this 7 days a week. And if you haven't already got your tickets down to the Bitcoin Mining Expo of the World, Mining Disrupt, happening in Dallas, Texas, from November 11th to November 13th, well, I suggest you do. And when you do, use your promo code SimplyBitcoin for 20% off your tickets. This is Dante Cook with Bitcoin Simply. Happy stacking.